Welcome, everybody, to QB Power Hour. Today's Thursday, October 25th, 2018. And today's episode is Avalara's AvaTax demo. So we'll be having Avalara for the whole hour, showing us how the AvaTax software works, which works for QuickBooks Online and QuickBooks Desktop. And that's what you'll be expecting this hour. Okay, we'll talk quickly about QB Power Hour, the CPE process, and then we'll spend pretty much 50 minutes or so on Avalara, including the Q&A portion. Just real quick scheduling. We're going to have our next episode next week on Thursday at 12 p.m. Eastern about creating options and offering packages for accountants. You don't want to miss that. I'm actually giving away a lot of my own sort of internal know-how on how my business functions in terms of offering and pricing packages. And then followed right after QB Connect on Thursday, November 8th. We're not going to do a QB Connect special yet. We're going to do a follow-up with this webinar. Let's call it Avalara 2, where we talk about TrustFile, which is another app altogether that Avalara offers. Avalara's offering its AvaTax TrustFile, and they have a couple of other products, but these two are pretty much the biggest ones for that concerns our world anyway. QB Power Hour typically is tips, tricks, and advanced insights on, we try to balance it, QuickBooks Desktop, QuickBooks Online 50-50, and from time to time, we'll have a third-party app, a sponsored guest, to talk about practice management and other related topics. Michelle Long is one of our hosts. She's not with us today, but definitely check out her 5 books in Amazon and her LinkedIn group called Successful QuickBooks Consultants, which has over 160,000 members, so not too shabby. About myself, I'm Hector Garcia. I live and work in the Miami, Florida area. I have my own classroom in which I teach QuickBooks, and my other team members teach there as well. There's my email. There's my Twitter handle if you want to message me for whatever reason. About the CPE process, these are CPE webinars. You must attend live, not available for people that watch the replays. If you attend live and you're logged in for at least 50 minutes and answer 3 out of the 4 polling questions, you will get your CPE issued. It takes about 3 weeks. Right now, we are delayed about 3 certificates. So give me until the end of October to catch up. I know a lot of people are waiting for the CPE certificates. I apologize. We just got off a real rough tax season. About our both the episode and the webinar series sponsor, Avalara, most popular app or service to manage multi-state sales tax compliance. Avalara, it's tax compliance done right. Check them out at avalara.com. And of course, you're going to get a full demo today. Some other important sort of things to keep in mind. In your handouts, in the slide, you have a couple of videos that I saved about sales tax in QuickBooks, basically. So for you folks that want to catch up with what QuickBooks can actually do with a sales tax, check out those videos or check out last week's episode in the website. It should be up soon. I'm not sure if it was up already by this morning. We uploaded it this morning. It should be up pretty soon on the internal QuickBooks Online sales tax topic. So without further ado, let's go ahead and jump to Avalara. It's 12:06, so it's actually perfect timing. So let me give Matthew, our guest from Avalara, presenter access, so he can share his screen. And I'm gonna upload just pretty soon in the handout section. I'm gonna upload both Matthew's and my handouts, so you have them available. I'm also gonna go ahead and turn off my webcam. And Matthew, take it away.
Awesome. Thank you, Hector. And thank you, everyone, for taking the time out of your day today to talk about sales tax. I can promise you there will be a lot of things that hopefully you've either never heard or never knew about sales tax. And we'll talk a lot about, what has changed recently, what it means like to outsource and work with a third-party provider like Avalara with sales tax automation, how we can help filing returns, calculating sales tax, and kind of sales tax end to end. And then towards the end of it, we'll walk through a live demonstration within QuickBooks and then show you what our platform looks like on the back end. And we'll cover a various amount of topics as far as what's a good fit for Avalara, what's the best way to go about sales tax, and really how a lot of these laws have changed. So my name is Matt Hammond. I've been here at Avalara for almost 4 years now, and I've been working in the QuickBooks space for quite some time. So very versed in the QuickBooks community and work with the users a lot. So we'll go ahead and dive right in and get started. So There's a couple things, and this will not be a death by PowerPoint. We're going to walk through about 15, 20 slides, and then we'll go through a demonstration, and then we'll open up for Q&A. So if you have any questions throughout the webinar, feel free to go ahead and type them in as we're running live, and then we'll go ahead and address those towards the end in the final 10, 15 minutes. So the agenda as far as today, we'll look at, the first question, why should you care about sales and use tax? What are a lot of the challenges and the needs that most people are facing today? Economic nexus, we'll spend quite a few minutes on that. The Wayfair versus South Dakota ruling, it changed everything, and a lot has changed, and a lot is going to change, continue to change over the course of the next 12 to 18 months. We'll discuss what type of solution is right for the organization, the solution overview, demonstration, then Q&A. So again, any questions that pop up throughout the call, please go ahead and type those in, and we'll address them towards the end. So we're going to talk a little bit to begin with just about sales tax, right? The tip of the iceberg is really just the rates. And then there's all of these things that go into a sales tax calculation. So number one, you have nexus. And if you've never heard or are versed in the term nexus, you'll hear me say that a lot today. Nexus is an industry term. That means you've established some sort of physical presence or a tie to a taxing authority. And a taxing authority is just a fancy word for a state. The second thing that comes about is whether or not the product or service you're selling is taxable. Then you have rate assignments, exemption certificates if you're selling to customers that are not taxable. And then once you've done all that right, you get the fun bundle of joy of prepping and filing tax returns. And then the confidence, if you will, if you be ready if a sales tax audit happen to happen for you. So a couple things. What are the big bullet points, if you will, about sales tax? Businesses are responsible for collecting and remitting sales tax on behalf of their customers. So if the customer is a taxable business and they're in a state where you have an obligation to collect tax, it's up to the company to charge tax on behalf of their customers and then remit it for the products or services that they're selling, assuming they're taxable. And currently, right now, there's about a little over 12,000 taxing jurisdictions in the U.S., which makes it extremely difficult. And I'll show a little preview of that on one of our free tax rate sites that you can look up. And then you have quite a few things that go into, the needs, right? Or the product or service. Like, is there an exemption based on the product and where it's actually being done? And so these are all of the major challenges that are going to come to play when it comes to sales tax. And we'll walk through a handful of these and what's important and what happens when you're actually putting in a transaction to calculate sales tax. So there's a lot of products and services that have varying taxability. And I'm not going to read everything on the screen, but if you look here, this is just going to give you some examples about how product definitions vary in a jurisdiction and in a state. One of the great ones I look at is donuts in Texas. Less than 5 is taxable. Over more than 5 is exempt. The candy bars in Indiana, that's one of the more popular ones I always hear. It has to do with the flour content versus a Snickers and a Kit Kat due to it being a snack or essentially a candy. And then bagels in New York. If you buy a bagel in New York and they slice it, so there's a service involved, it then becomes taxable. If they don't slice it and you just order that bagel whole, you should not be charged tax because there is not a service involved and it's exempt from sales tax. So taxability can always vary based on how the product is used and what state in particular that particular product is being sold to or actually consumed. One of the things I like to talk about the most, and this typically is going to lead to where businesses are located, is sourcing rules. So for the most part, most states are destination-based, as you'll see on the far right. I like to start on the far right and then work my way left. California and Texas have mixed sourcing states, meaning the counties are origin-based, and then any special taxing jurisdictions and cities are destination-based. And think about it, when you're shipping a product that's a tangible good, that's going to be taxable wherever you're selling it. Services have varying taxability, but typically a service is done at a location, and that's why it's going to be destination-based. And then on the far left, you'll see our states that are origin-based for products. So if you are located in Arizona and you're shipping in Arizona, you're going to charge the sales tax rate for where you're located. If you're shipping to that state and you have a presence there or an obligation, but not an actual home location, then it's still going to be done on the ship to. But this is if you are actually located in those states. So sourcing rules are very challenging, and QuickBooks natively is not going to handle these determinations. It's just not built in. It's not allocated in accounting packages and software. So sourcing rules are very, very important when it comes to businesses having to charge, collect, and file or remit sales tax in multiple states. So let's talk for a minute about zip codes. For the most part,
Matthew, quick question about that. I don't know if you mentioned it while the audio was out. This matters when we have established nexus on the ship to states, correct? Because regardless of what the source state is, right? Because you have the mix-based origin, so you have different rules across different states in terms of how you manage shippings from that goes to different states.
Correct. So if you have a physical location in an origin-based state, and that's where your company is headquartered, then you're going to be charging tax based on where you're located. If I'm in North Carolina, but I have an obligation to collect tax in Arizona, I'm still going to be charging tax based on where I'm shipping the product in Arizona. So it has to do with your business profile for how you have to be calculating and charging tax in these particular states.
And that's if you have the nexus in that particular state. Does Avalara offer a service of determining whether or not? Because I find that to be one of the common questions is, how do I know which state I'm supposed to be charging sales tax in?
Great question. Yeah, so we do Avalara has an entire team. They're our tax advisory services team, and they will do, we work with registrations, we do voluntary disclosures, we also do a nexus study where for $4,500, we will ask you a bunch of questions and we'll provide an analysis based on your prior 12 months of business activities in a very detailed rolled up report and tell you how many states we believe you have an obligation to collect tax in. So we do the whole country for $4,500, or if you just knew you only had a handful of states, I believe it's about $250 per state, and I think we have like a 4 or 5 state minimum. But we do nexus studies, and we will take into consideration all of your activities from the past 12 months, and we're going to ask a bunch of detailed questions that are in particular to those particular states that we're doing the studies in. So yes, we do offer that.
But the customers can walk in telling you what states they have nexus in. They don't have to pay anything for you to determine.
No.
Okay. I got to keep going.
Yeah, when you're using Avalara, and I'll show that here in a little bit, you're just going to check a box that says, hey, Avalara, I want you to calculate tax in these 4 states. And then when we do that and you're utilizing our plugin, we're going to calculate that tax in real time. And I'll show you that here in a few minutes. So sourcing rules are tough. These are some of the states where that can be challenging, but for the most part, taxes are based on destination, where the product or services are changing ownership. And this leads to the next one. I think I mentioned a minute ago, there's 8 out of 10 people that I talk to think that zip codes are how you determine sales tax. If you get nothing out of this webinar, I want everyone to realize and be aware how zip codes are not always accurate. They're not going to determine product taxability, and typically most accounting packages are just doing a zip code lookup. So taxing jurisdictions don't always follow individual zip codes. You can have municipalities and local counties that can have their sales tax in addition to the sales tax for the state level. Tax rates can vary significantly within a zip code. And my next slide, I'm going to leave up for a couple minutes because this is kind of where it typically resonates with folks who think they've been doing it right for a long time, or that they think Colorado is an easy state. But zip codes are going to make you think you're doing it right. Typically, they're going to lead to errors in calculations, and they're also not going to determine whether or not the product or service that you're selling is or isn't actually taxable. So this is probably my favorite slide. And for me to get excited about sales tax, that tells you a lot, because I talk about it about 6 days a week. So this is one zip code, the same zip code, the same neighborhood, the same street in Commerce City, Colorado. This is a residential neighborhood. All of the houses in blue have a tax rate of 9.25%. And you can see the composite breakdown right below it. The houses in green or yellow, as it's coming across, have a tax rate of 4.75%. That is a 5% delta from one side of the street to the next. So if you're just going by zip codes, go ahead.
That's what you call sales tax gerrymandering.
Yeah.
That's insane.
And Colorado, And Colorado is a hard state. Not every state is like this. Like Massachusetts has one rate, so it's not difficult. But Colorado, Louisiana, Alabama are the home rule states that are very nitpicky and they can change all their rules. Texas and California are difficult as well as Arizona. But this is why we say zip codes aren't always accurate, and they can give you a true false sense of security. Because at the end of the day, if you had 1,000 orders into this neighborhood and you were charging 4.75% when you should have been charging 9.25, you're going to be in a pickle when it comes time to file a remit the following month. And at the end of the day, the state really doesn't care what rate you charge. They could care less if you charge 4.75 or 5.2, but if they're owed 9.25%, you better believe that's what they're going to expect on a tax return. So it's worth a conversation if you know clients or if you have end users or if you're working with people that are in some of these states or if they think that the native tax tools are okay with what they're selling. Zip codes aren't going to get the job done, and they can really put folks in a real jam if it's done incorrectly. So I mentioned earlier, Nexus is an industry term that states you've established some sort of physical presence or a tie to a taxing authority. So everything on the screen you'll see here, and that is not me in the picture, just for the record, everything you see on the screen, I want you to imagine if you're a company and your home base is in Florida. You live right down the street from Hector. If you have any of these things on the screen outside of the state of Florida, you might need to get registered in those states. I can tell you right now, and I'm not a CPA or a tax attorney, that's usually the first line I lead with in my webinars, but I can't give advice. But 99% of the time, if you have boots on the ground, if you have inventory, if you're traveling into other states, if you have contractors, real property, multiple locations, these are the reasons why businesses have to get registered outside of their home state. Some states consider drop shipping, which you'll see on there, as a nexus building activity, and some don't. But that each state is specific, right? But think boots on the ground, inventory, commissions to resellers, locations. Those are all reasons why companies have to get registered to collect remit sales tax. And again, this is physical presence nexus. This has always been the case. It hasn't changed. It is different from state to state, and this is always going to be a rule as far as physical presence is concerned. On that note, we're going to transition to the new rules and the new laws. The entire sales tax.
Go ahead. Let me run a polling question. Sorry, I don't want to interrupt you because I know.
Yeah, no worries. Perfect timing.
We're getting to the exciting stuff. So just let me run a quick polling question because we are giving CPE, so we have to do all the polling questions here. There we go. So just want to know whether or not you've used Avalara before. That would be useful for us. Some of you may be asking, what is Avalara? We're getting there, I think. We're getting there. Okay, so Matthew, while you're at it, let me ask a couple of quick questions that are here. One is, does Avalara work outside the U.S.? Does it work with Canada?
Yep. So QuickBooks Desktop. So two things. Avalara can handle sales tax determinations in the U.S., Canada, and 189 other countries. QuickBooks Desktop, we have the plugin for every version but the Canadian version, and we can't calculate GST, PST in QuickBooks Desktop and online. But the Canadian version of QuickBooks, we do not have a plugin for, unfortunately. We can calculate it in Desktop in the US version, but just not the Canadian version.
So you can't. So are you going to go about the plugin, because I think it's important for people to understand what is a plugin. The plugin is a piece of software that allows you to create the transaction in QuickBooks. Then it goes and fetches the sales tax info and comes back into your desktop software and recalculates the sales tax. So it basically allows you to use the regular workflow, but then it uses sales tax technology in the back end to put the correct sales tax and overwrite whatever QuickBooks calculated. Is that a good characterization?
Yeah, and the only hindering factor for Canada is just if let's say you're a business and you are located in Canada and you are using the Canadian version of QuickBooks, our software doesn't integrate to that particular version, but we plug into every other version but that. So, and we'll cover that when we walk through the live demo, but great question. Okay. And the 6% that say they don't deal with sales tax at all, we'll address that here shortly as well. So a lot of good feedback on the polls there.
Okay, let me go ahead and close the polling question. And go ahead.
All right, perfect. Thank thank you, everyone. Thank you for your participation in the polls, and if the one that are having some issues with it, please reach out to me after. And the what is Avalara, we're going to get into that in a couple minutes. But so we had just talked about physical presence nexus. Everything changed recently, and these laws are also changing rapidly, day after day, week, and month to month. So South Dakota essentially challenged and went to the Supreme Court for a ruling that stated, hey, the way people buy and sell products now is drastically different than 20 years ago. So if you think back 20 years ago, you were always typically having to go to a store. You were going to a brick and mortar. You were driving somewhere to purchase and sell product. That is very, very different now. With Amazon, with e-commerce, it's a different method for selling products and services, and thus the Supreme Court decided that because the way people buy and sell products have changed, they are now going to change the laws for sales tax. So typically what we're seeing is, let's say you're a business in Florida and you do over $100,000 in revenue, or you do 200 or more separate transactions in a state. Those are the reasons why companies are going to have to get registered. So if you live in Florida and you do $100,000 of sales in South Carolina, or you do 200 annual transactions in Nevada, but you never go there and you're just shipping your products via common carrier, businesses are going to have to get registered in those states because of the new ruling, and it's called economic nexus. So what I tell most businesses and controllers and partners and end users who I talk to is, now is the time to take a proactive approach, meaning businesses have always been reactive to sales tax. They've been reactive to new rulings. Now's the time to take the proactive approach, and it's pretty simple. If I'm a business, I'm going to look at where I ship my products the most. So if I'm located in New York and I sell winter coats, I'm going to look at the states I sell to the most, which is probably going to be above the Mason-Dixon line. I probably don't sell a whole lot of winter coats down to Florida, so I probably won't hit a threshold of $100,000 or 200 transactions. So that's probably not going to be a state I'm going to have to worry about. But my advice, and again, I can't give advice, but our suggestions are to look at the states and run reports, whether it's a monthly or a quarterly or an annually basis, and see where you're shipping the product the most, where are the most of your sales. Those are the additional states due to economic nexus that businesses will have to get registered in moving forward. Now, economic nexus has been around for quite some time. There was only like 6 or 7 states that enforced it, but this particular ruling has opened the doors for every state of the 46 states that collect sales tax to make their own rules. South Carolina is not actually listed on here. They just changed a rule that I think goes into effect on 11/1. South Carolina has stated the minute you do $100,000 of sales, whether it's taxable or non-taxable, you have to get registered. So I was on the phone earlier today with a company, and their invoices are about $25,000. And she said, so you mean to tell me when I do 4 sales in South Carolina, I have to get registered? And that's unfortunately going to be the case. Now, every state is different. They have different thresholds, and the most common are 200 transactions or $100,000. California and a handful of other ones haven't even put theirs out there yet. They're still trying to figure it out. But our talk track and advice, if you will, is to look at all the states where you do business regularly. If you're trying to stay up to date with the economic nexus, you can utilize Avalara and our tax advisory services team, where again, we can do a nexus study. We can monitor your transactions. We can help determine where you have nexus. We can look at your sales on a monthly or quarterly basis to see if you've hit or triggered some of those thresholds. And then also we can help get registered in those new Jackson jurisdictions. We've actually partnered with businesslicenses.com to fulfill the sales tax registrations. Registrations are about, I think, $199 per state, and typically take anywhere from 2 to 3 weeks to get those tax IDs back. So that's if you know you're going to hit a threshold in Utah and you need to get registered, you can leverage Avalara to get registered and obtain a new sales tax ID in those particular states.
Matthew, quick question before you go to the next slide. I wasn't sure that we can't see what the orange states are. What are the orange dots? What does orange? What the orange mean on this graph?
Yeah, so the orange are the streamlined sales tax. So the SST is a streamlined sales tax initiative. A group of 24 states got together and said, hey, we're going to put this initiative and say, for voluntary sellers that don't have presence in those particular states, they have essentially what we call kind of like an all or nothing. So you can voluntarily register and remit sales tax in those states. It's an all or nothing. So you have to say, I'm located in Florida. I want to get registered voluntarily in all these states. We will do the registrations if you go through the SST program with Avalara. The registrations are free. The monthly returns filings are free, and the calculations for our plugin are actually going to be no charge. The only thing you would have to pay for is any states that are non-SST, the calculations, the returns, et cetera. But it's a program where if you meet the criteria, it's a great offering if you know you're going to have to get registered in a lot of states. Now, there are some specific rules, not to get too in-depth on it on the call today, but if you have more than $50,000 of tangible physical property, or if you're paying an employee over $50,000, I think, in salary or something along those lines, you may not be eligible. But you can utilize Avalara, as we are a certified provider, a CSP, for the streamlined sales tax.
Okay. And you're gonna go to the demo because we're already about halfway in. Want to make sure you have enough time for that.
Yep. I'll zoom through a couple of these real quick. So we'll send the slides out after the call. These are just some frequently asked questions as far as economic nexus. And one of the big ones is number 9, does physical presence still trigger? 100%. Physical presence still trumps everything. If you have boots on the ground, you need to get registered in those states. So for QuickBooks users, there are also people that are selling on Amazon. And what does that mean? So Amazon has a fulfillment by Amazon program, Amazon FBA. Amazon has warehouses in 30 states. 26 of those 30 states deem that third-party inventory is a nexus building activity. So the moment you get registered and sign up for the Fulfillment by Amazon program, where they're going to ship your products all over the country to get them to the people you're selling to the fastest, you potentially have to get registered in all 26 states. What that also means is that you have to manage sales tax in QuickBooks for 26 different states. Very, very challenging. This is probably worth a longer conversation, and Hector, I'll send over some great information for you to send out to the folks as far as those states and what that means. But if you're going to be selling on Amazon, it can be very challenging, and it can open the doors where you have to get registered in quite a few more states.
Regardless of which state you're actually selling in or where you have nexus, you're saying that if you sell in Amazon, regardless of whether your actual warehouse is, it may automatically put you in nexus with all the states. Is that what you're saying?
They can move once you are enrolled in the FBA program, Fulfillment by Amazon, so they're fulfilling your orders, they can put your product in any one of these states. And the moment your product gets put in Texas, that is when you will have established nexus in that state, because you have tangible personal property. You have inventory in that state. And 26 of those 30 states deem that third-party inventory is a nexus creating activity. So it's a longer conversation, but that's the high-level overview. Like, you'll see North Carolina on there. North Carolina is not one of those 26 states. North Carolina is a sorting center, so it's not a fulfillment by center, so you don't have to get registered there. But it's worth, at the end of the day, it's worth a conversation if you're working with people that are selling on Amazon FBA to entertain the idea that they may have to get registered in quite a few more states.
Okay.
So why do companies outsource sales tax? 25%. I'd say this is probably about 25 to 30. The auditor is likely not likely to find mistakes. 75% of the people we talk to say that they are not comfortable and they don't feel like they would be in good shape if they actually went through a sales tax audit. So it's one of those things where it's not always about you and your business, it's who you're selling to. Companies get audited because the people that they're selling to all the time go through an audit, and then they see your name on their books, and then they're going to walk over and knock on your door. So the last thing you want to do is go through a sales tax audit if you don't feel like you've been doing it right or properly or confident in the sales tax aspect. So this is where I do a quick pause, and I only have a couple more slides, and we'll be in the demo here shortly. So I'd like to say thank everybody for using Avalara. And I'm sure you're going, well, what is he talking about? So think about everything you did in the last week, not just today. Did you fill your car up with gas? Did you purchase bagels in Texas? Did you use your cell phone when you were driving to work? Did you buy a coffee? This year, Avalara is going to calculate more than 6 to 7 billion transactions. So odds are you're probably using Avalara or purchasing something off someone's website, and we're the ones who are calculating tax. The reason I list gas and phone calls is we have not just sales tax, we also handle telecommunications tax, excise tax, short-term rental tax for Airbnb, VRBO, and lodging. We cover all aspects of tax compliance in various industries. So high level, we're going to show, and I'll get into this here in about 3 minutes, but this is really how Avalara works. So you have your invoice up in the top right corner. And you're going to save, when you go to save an invoice, and we know that the state that you've told that you're shipped to address is one that you've told us you have an obligation to collect tax. When you save that invoice, it's going to reach out to Avalara. It's going to ping our tax engine, which is represented by that A in the cloud. And then in real time, we're going to properly assign the rates and rules and put a tax determination back into QuickBooks in under 0.2 of a second. From there, once we've calculated the tax, we can automate the full compliance suite where we handle the filings and the remittance of the sales tax return and the sales tax owed to the states and local jurisdictions. You'll see at the very bottom, AvaTax doesn't support cash basis accounting. We require companies to be on an accrual basis for accounting reporting purposes if you are trying to utilize us to file your tax returns. Because if you're a monthly filer in California and we use the date on the the date on the invoice as an anchor. So we see that $10,000 worth of sales tax on, looks like March 14th. We want to remit that tax the following month. So if you don't get paid for 120 days or you have terms, it may be difficult to utilize our end-to-end. So that's why we require companies to be on an accrual basis. States are leaning and pushing towards companies to be on an accrual basis as well. Louisiana has been working on it for, I think, a couple of years because they don't want to wait 3 months for their money. You completed a sale, they want that tax right away. Here's everything that goes into an Avalara tax decision. We're almost done with the PowerPoint, folks, so thank you for bearing with me. So number one, we're going to validate the address. We're then going to actually convert that address to lat long. We're then going to reference whether or not you have an obligation to collect tax in that state. And then we're going to look at the thresholds, the sourcing rules, the tax holidays, and then also if that customer is or is not exempt. You can mark a customer exempt in QuickBooks all day long and we won't charge tax when it pings our service, but you have to be able to provide a reason and logic why you didn't charge that particular customer sales tax. So a little bit about who is Avalara. We have over 600 pre-built integrations. We have hundreds of plugins for the ERP side, the CRM, point of sale, as well as e-commerce. E-commerce is huge today. I feel like I see an email every day with a new platform that we plug into. So there's a 95 to 99% chance we have an integration to what platform and what invoicing system and accounting package you're using to complete your sales. Just another visual for some of them. WooCommerce is one of the more popular ones. 3D Cart, Xcart, these are very, very common platforms that people are using. And you're on QuickBooks now. You may be on NetSuite. In 3 years, we have an integration to that as well. So you can never outgrow Avalara, and scalability is one of the things we thrive on here at Avalara to keep customers for life. So implementation overview. To activate your account takes about 5 minutes. To configure a tax profile can take anywhere from 5 to 60 minutes, depending on how many states you have an obligation for tax. To download the connector, the QuickBooks connector can be downloaded in 10 to 15 minutes. That's on calculating tax. To remit it, to utilize Avalara's end-to-end solution, you have to tell us what states you file tax returns in, how often you file them, and then we can do everything else. You'll sign a power of attorney, put banking information in because we will pull the funds from you on an account that you designate, and then we will actually handle the returns and the remittance on your behalf. So right before we get to the demo, 5 steps to reduce risk. So number one, evaluate where you have an obligation to collect tax. If you have no idea, if you're unsure, if you're just starting a business, it's worth a conversation. Reach out to either Hector or us over here at Avalara, and we can definitely have a conversation about where you may have obligations. Ensure your systems are sensitized and they have all the important information that's accurate. Evaluate the costs and risks. The big thing I like to tell people is like, let's figure out what you must have, and then also what would be great to have. Everybody can use this for calculations. Calculations are always wrong. People are always calculating sales tax wrong. So if you get that right, it can then be a little easier to file the returns. And it would be nice to have Avalara file those returns, but if you have one person in your company and they've been doing their filing and remittance for 20 years, they're probably not going to want to change their process. But it's worth a conversation. And then make sure you have buy-in on everybody for the stakeholder groups. All right, so let me back out of here, and I'm going to pull this up on the screen. And Hector, can you just confirm with me that you can see my screen here?
Confirmed.
Okay, perfect. All right, so I'm in QuickBooks Desktop, Manufacturing and Wholesale Edition 2018, and this will go up just a little bit here. So the things that are really important, when I click on the File dropdown, you'll see AvaTax listed as a file menu item. It's our connection is just a piece of software that allows your QuickBooks to talk to Avalara. So it's a pre-built integration. It's already certified. It's already maintained. And it's just a download, and you just have to download the plugin, and it'll appear right here in QuickBooks in the file. So what we'll do is I'll put in just a customer. This will pre-populate some addresses. You'll see a bill to in Seattle, Washington, and a ship to in Half Moon Bay. I'm going to edit this and put this on our current date here, which is the 25th. And so the things that are important, when you're putting your line items in like you normally do, the thing I like to reiterate to most companies, and everybody talks when we walk through a demonstration, is it's going to be business as usual for whoever is entering invoices or putting quotes in or whatnot. But you'll put your 2 line items in like you normally would. And as long as the ship to address is in a state that you told Avalara you have an obligation or you're registered to collect and remit tax, the tax item is going to be AvaTax. That's the trigger for their QuickBooks to call our service. So we see you check the box for California, AvaTax is a tax item. That's a trigger for it to reach out to us. And when I save this invoice, right now, as I mentioned a second ago, it's reaching out and it's properly assigning the rates, properly assigning the rules, determining if these 2 line items are taxable or not, and we're going to put another line item saying total AvaTax that will be calculated and put right on that invoice in under 0.2 of a second. 2 main key points, and I want to make sure we leave enough time for questions. Number 1, there's a limitation in QuickBooks where this is going to say 0 and it's going to say AvaTax. That just lets you know that we're the ones making the determination. We're just overriding the native tax functionality in QuickBooks, which is typically done via zip code and is not 100% accurate, and we're going to determine if these individual line items are taxable. You can edit this if you don't want it to say sales tax or AvaTax. You can make a change on that, but it will be an additional line item, and the tax item moving forward will be AvaTax.
Let me make a quick correction, Matthew.
Yep.
QuickBooks does not calculate sales tax based on zip code. QuickBooks doesn't calculate sales tax at all. You actually have to pick the tax item manually. So I just wanted to let you know there's no automation. QuickBooks Desktop doesn't determine the sales tax based on ship it to address or bill to address or zip code. You have to create the sales tax items, and you have to pick the right one from the drop down box. Just wanted to clarify that because QuickBooks cannot do any of this stuff right now.
And a state like Texas, great point, Hector, is that Texas has like 1,485 taxing jurisdictions. So that would be potentially 1,400 tax items you'll have to manage and set up for your customers on an ongoing basis. States can change rates, rules, boundaries, product taxability whenever they like. It's what they can do that if they want to. This is essentially saying, hey, if a rate changes, if a boundary, if a rule, if the taxability changes, we are the ones making that determination, and we're going to maintain that forever on an ongoing basis as you are utilizing Avalara. I'm going to pop out of QuickBooks, and I'm going to jump into AvaTax. I'm going to show this exact same order we just did, which is on 10/25, and the invoice number was 77. So let me log in here real quick. So AvaTax is our core product. Within AvaTax, we have 3 main offerings: the determination engine, which is the calculations, which I'm showing you right now. We can then also offer the filing and the remittance, which is a complete hands-off approach. It's about a 90% hands-off outsource. And I'll pull up that same transaction we just ran, which was on the 25th. So let me just narrow this down, just so you can see how granular our application is. And it's the only one that was ran today. So that tells me my sales team hasn't done many demos, which that's all right. But see here, you'll see the number 77, same invoice. And when we open this up, the transactions tab is just a full repository for everything you've done. So you can see all of your transactions. So here you'll see the invoice detail, the origin, the destination, excuse me, and then you'll see the tax summary. On the very bottom, it's going to show you the individual line items, whether they're taxable or not, and the dollar amounts that are affiliated. And this is kind of like the aha moment, so to speak. So we're shipping to Half Moon Bay, California, and at that ship to address, there's a county, a state, and a special district tax and a special local tax for San Mateo County. We are going to take that composite rate, which applies right here to be 8.75%, and apply it to that individual line item, and you'll see we get $875 worth of sales tax. So that's how granular our solution is when it's calculating sales tax in real time, as well as determining if the product or service is taxable. You'll see a software maintenance contract here, and it's a $500 line item, and it's only 50% taxable. So Avalara has all of these system tax codes that best describe the product or service you're selling. So you'll take your items in QuickBooks and map those to our Avalara tax codes so we can then make the determination. So we know that this tax code describes a software maintenance contract. So if you're a software company and you do maintenance contracts and agreements and sell software, you pick a tax code one time, and then we're going to be the ones to make the determination on whether or not it's taxable. We have, I think, like 75 people in our content team that look at this and maintain these up to date all the time in real time. It sounds like a not fun job, but they seem pretty happy, so we must pay them well. But we're maintaining all of that content on an ongoing basis. Now, if you have thousands of items, you can map them at a category level, or it's really specific to when you're selling products and services that have varying taxability. For example, if I'm selling cell phone cases, that's a tangible good. It's fully taxable. It's something you can touch. TPP, tangible personal property, that is always going to be taxable unless the customer is not taxable. So you don't even have to map those. Our system will default to fully taxable. When you need to pick a specific tax code, and I will put this, let me pull it up here. Give me 1 second. I'll send it over here in the chat box and I'll send it to you, Hector. We have all of these tax codes. So if you're ever trying to figure out if you're a good fit for utilizing Avalara, you can come in here and type in what you're selling. So software companies are going to have implementation services, system software. This is where you can see if it's a good fit or if we have the content. I can promise you, we're a SaaS company. I like to think of us as a CAS, a compliance as a service, but odds are we have the content behind what you're selling, and specifically categories like clothing and apparel, common carriers, so your freight, your shipping. We have thousands of these system tax codes where we can automate the ongoing maintenance and ongoing content on whether or not the products or services are taxable forever.
Matthew, can we take a quick break to do a polling question?
Sure.
Okay.
Yep, fire away.
And okay, so there's I'm gonna put the polling question up, and there's some really interesting questions here. One is there a partner program that offers more in-depth education or maybe better pricing or commission to accountants that are actively recommending this product?
I'm sorry, Hector, you kind of broke up. Can you say that one more time?
Yeah.
That was the polling question, correct? Okay.
Sure. Yeah, I'm saying right before I run it, is there a partner program for accountants that want to get more in-depth education about sales tax, AvaTax, or better pricing or commission structure for accountants actively? What is that? What is that?
Yeah, we do have a referral program, and we'll send that out to the audience as well, along with the slides where you can actually earn up to, I think it's like 20% commission on the software. We do offer training. Typically, a lot of the partners that come through, I'll walk through a live demonstration and we can talk to it as well. And you're going to have a dedicated team, right? So you're going to register the lead with Avalara. It's going to be tied to your partner account, and then we're going to note, the amount of opportunities you sent over in the businesses and the closed won deals, and we definitely work from a partnership perspective. So yes, we do have that as well, and we'll get plenty of information over to everybody on the call.
Yeah, because the biggest concern, and you can just look at the questions in the questions box, is I live on my customer is on state A and he sells XY on state B and he's selling medical products. How do I know whether I have to charge sales tax or not? There's a lot of those type of questions where people are trying to sort of answer specific questions for their customers, and there has to be a place to ask this, because it can't be that we have to inquire a tax attorney and pay $5,000 each time we need to know these things. So how does Avalara help with that stuff?
Yep, that would be something where I'd say come to myself and my team directly, and we can walk through their tax scenario. We can have a conversation on whether or not they may or may not need to be registered and or charging sales tax. It's something where we need to have a conversation, walk through their business needs, talk about what they're selling and how they sell it, and we can tell you what we're seeing most people do in that particular scenario and how they're handling it.
And is price something you can talk about, Avalara, or is that like vary per client type of thing?
Yeah, so price does depend on it's actually really simple. So number one, we care about how many total transactions or invoices in the states they're registered in are going to ping our service. Now, for example, let's say you're a business and you're in Florida. I keep using your state, Hector. Let's say you're in Florida, you're registered in 3 states, you use QuickBooks, and you do 1,000 transactions a year in those 3 states. It's $145 annually. Our lowest tier, if you're a brand new company and you just bought QuickBooks and you're only going to do a couple hundred orders, our solution starts as low as $50 a year to plug into QuickBooks. So for $50 annually, that will give you up to 250 annual transactions in the states that you collect and remit tax. That's on the calculation piece. The returns filing is around $50 to $54 per tax return. Now that's our fully managed white glove service where we file the returns on time, we fill them out properly, we answer tax notices. The only thing that the setup leg, and I can show you real quick, the only thing for the returns is that you have to tell us what forms you file and how often, and then you log in once a month, once a quarter, approve those numbers, and we'll file the returns and handle the remittance for you as well. So returns filing are roughly $50 per form, and the calculations, again, is based on how many invoices you have. In the states, you have to collect and remit tax on an annual basis. And I can pause here if I think you have one more poll you want to get in, Hector.
No, in a little bit. So what you're showing now, it's the actual tax return. That's a different product. That's trust file, correct?
No. So AvaTax is our core product where we do calculations, returns filing, and manage exemption certificates. So when we're plugged into your platform and we calculate sales tax, we can then automatically handle the filing and the remittance in real time. This is our white glove offering, kind of our initial product. The other one you're referring to is more so for marketplaces, and we'll be talking about that here in a couple of weeks.
Oh, okay, I see. Perfect. Okay, so anything that has to do with like large e-commerce and stuff, that's going to be trust file. Is that what you're saying?
It really depends. I mean, trust file, and I don't want to dig too into deep of it because we're not walking through it today, but that's more of a solution where companies are selling on marketplaces, or they're selling on a channel where there's already tax calculated, like Amazon calculates tax, eBay calculates tax, Etsy, all those places that we don't have integrations in points to calculate tax. We pull that data out and we offer a filing solution. AvaTax is when we're filing the sales tax that we calculated. So we calculated $88 in California sales tax last month. We're going to remit that $88 and we're on the hook to file it on time and fill them out properly, et cetera.
Okay. Now, what else you had? We have about 8 minutes left, and we need some more time for the closing. What else pressing you have on AvaTax?
That's really it. I mean, it's based on how many transactions you're going to need. I mean, let's say you were in 30 states and you had 10,000 transactions in all those states that we're going to calculate tax on. That's about $2,400 annually. So it ranges. It starts as low as $50 a year, and it can go up to a couple thousand. It just really depends on how many times you're going to ping our system, and we're going to calculate tax on invoices. So calculations is based on volume, kind of like a cell phone plan. You buy a bundle of minutes, but you buy a bundle of transactions. We do 12-month agreements. And then on the returns filing side, if we're going to file the returns for you, it's around $50 per form. And we handle the local returns, the local remittance. We handle everything within AvaTax.
Okay. Well, let's go through the Q&A then, because there's quite a bit of it.
Sure.
So one of it is you sure there's a percentage of payment to advisors that refer clients to Avalara, correct? You're saying that's active?
Yeah, I need to check on the partner program, but we have a referral offering, and I will double check on that.
Okay, let's just make sure that that's very clear on the email that we're gonna send for people that opted in.
Yeah, exactly.
For more information. There's a question here that I think I'm gonna answer is, does Avalara only work in accrual or does it work in cash basis? And I think that's a complicated question because there's sort of two things intertwined. So Avalara, at least on the QuickBooks desktop app that he showed us, puts in the obligation to pay sales tax when the invoice is created. It doesn't really only read the invoices that are paid. It just reads the invoices that exist, correct? So in other words, if the invoice exists and there's sales tax, it doesn't matter whether the customer paid you or not, it will calculate the sales tax.
Yeah, we can calculate the sales tax all day long, but it may not be accurate when it comes to reporting, because if we calculate tax on an invoice in January and then you don't get that payment until July, it's going to look a little funky as far as in QuickBooks and how you report the sales tax.
But AvaTax would require you to change the invoice date to a different month if you don't want to report it in that particular month, correct? Because that's how it knows how much sales tax. So just the answer to the question is, it only does accrual basis, right? Because there actually isn't any, there's no such thing as, I don't think any state is on quote cash basis accounting for sales tax. I mean,
Yeah,
I think,
it's for the it's for the low volume but high dollar invoices. I mean, if you had $100,000 invoice, I mean, if people are going to pay the $8,000 worth of tax and an 8% rate like California up front, then great. We can calculate it, we can file it, we can remit it, no problem. It really just depends on how you are getting paid once you have completed an order and what your terms are.
because one of the concerns are, for example, when you let's say you have a house that you rent, and you charge sales tax, and like a Uber, I mean, an Airbnb type of thing, you typically charge in the sales tax like a couple months before when you actually get the money. But you technically earn that, when the person stayed, right? Or you may have an invoice that you created last year for a sale, that's a construction project, and you're not going to charge. Well, construction is complicated, but let's say it's a project that goes in phases, and you don't actually
Like on
complete it.
billing, like the co-op billing. Yeah, yeah. Those are the easiest way to phrase it is Hector, is those are a little more challenging for Avalara to offer a true automated solution because there's a lot of variables in play. I
Okay.
like to take it as kind of a one-off conversation with those particular businesses and walk through their how they're handling it and how they're doing it right now, and we can always plug in to calculate tax and make sure they're calculating it, but then they just want to either edit their dates on their invoices and or how they're looking at the reporting when they're filing the returns.
So what you're saying, if you don't mind me saying it this way, and I'll let you correct me, this is not like a plug and play app where you click a couple buttons and things just work automatically. That you have to give some thought to this. Right? You have to onboard the client in. You have to think about.
But we can definitely help out, and we can definitely plug in to calculate the sales tax and automate it as much or as little as the businesses are needing.
Right. But the quick question was, before I run the last polling question, is this is not a plug and play app, right? That you just turn on and it just works, right? It's you have to give it some thought, right? You have to think about, okay, which states am I having nexus on? Okay, how am I collecting sales tax in cash basis, accrual basis? There's some preparation that either the end user has to make or the accountant partner has to make before you just go get the app. Correct? I mean, that's
yeah, it's really simple. I mean, you like if you bought the application right now, you would come in here and say, hey, Avalara, here's the states that I collect tax in. Here's the products I sell. Here's my company and locations. I mean, it's really telling us if you already know I only collect tax in 5 states and I'm not expanding, then you just check a box and tell us those 5 states. You tell us what you're selling, and then it can be a hands-off approach. To download the connector and the plugin, that can be done in 10 to 15, 20 minutes. And we can help install that for folks if they need it. We do a 1-hour go live call for like $305 where we will actually install the plugin for you. My dad's not a tech savvy person, so he probably would not be able to figure it out, but it's not complicated to get it downloaded.
Okay. All right. Let me run the last polling question here,
Sure.
and
Yep.
let me see what other questions I have pressed. I mean, there's literally like 100 questions. I'm just trying to figure out which ones can actually.
Hey, there goes. I'm doing really good or really bad, but no worries. And if
Right.
you want to send them to me after, I can answer them via email.
Yeah, I'll do that. The questions are a bit complex, right? Like uh like they're asking, like somebody saying, does it handle Arizona sales tax for construction projects? I'm like, I don't even know if you can answer that so quickly. You have to kind of look at.
Construction is a very tough industry for us because there's other taxes that are involved, but that would kind of be a conversation I'd say we take offline.
Okay, yeah, and will they talk to you or somebody else? I mean, what's your role specific? Because you gave us your contact info. What's your role specific?
Yeah, no problem. Yeah, you guys would come directly to me and either speak with myself or one of my sales reps.
Okay.
Yes, sir.
All right, perfect. Anything else you want to add before I just wrap it up here?
No, one question I saw they asked about cannabis tax. Unfortunately, we don't handle that. The bad debt question, that doesn't sound like anything we do. We can address if they owe back tax liability or if they went 10 years without collecting tax. We do voluntary disclosure agreements, so we can address that. We help Canadian-based companies as long as they're not using the Canadian version of QuickBooks. We handle one of the questions, and I'll stop after this. But yeah, you tell us what you're selling, we will make the determination on whether or not it's taxable. That's our bread and butter AvaTax. But go ahead.
Do you do back tax representation? So if someone gets hit by a state that says, hey, you owe us this much because you haven't collected or whatever. You guys do that type of work?
Our tax advisory services team can do some form of like audit defense and audit assistance. It's a scope of work, typically an hourly fee. We have a consultation to discuss what is going to be needed, and then we quote a pricing for it. But that'd be where you reach out to me, and we'd set up the call internally.
Okay, perfect. Yeah, just wanted to ask as many of those as possible.
Yeah,
Believe it or not, actually, you know this. This is an area where most people just kind of stay away from because there are so many there are so many liabilities on answering these type of questions wrong, and most folks just don't specialize on sales tax. It's just
Yep.
it feels like there's too much to think about, and at the same time, it feels like you can never catch up, just because the states can change all the time, right? So Matthew, thank you very much.
Yeah, we have the saying where we say it all the time. I hear it at Avalara, and then I'll jump off. But do what you do best and outsource the rest.
Oh, I like that.
I will always call a plumber if I got a problem with my toilet. I'm not going to try and fix it myself. Same thing with sales tax.
I like that. I'm actually going to steal that. Do what you do best and outsource the rest. I love it. I love it.
Sure.
All right, thanks, Matthew. I guess we'll have you back or somebody else from your team in 2 weeks to talk about TrustFile.
Yeah.
All right, thanks.
Definitely, I'll get on it. Looking forward to it.
All right, guys. Thanks for dealing with the audio issues we had in the middle. Thank you very much about that. About the upcoming episodes, as I mentioned before, next week, Thursday, I'll be talking about creating options and offering packages for accountants. This is obviously this is value pricing in essence, and I've been creating a lot of content about value pricing, and this is going to be sort of a summary of like sort of the most practical piece of value pricing, which is creating options and offering packages for accounting professionals like myself. November 8th, we'll be talking about Avalara TrustFile, okay, which is another app, another thing that Avalara offers. Then on the 15th, so we're very busy here. On the 15th, we'll talk about what's new in QuickBooks Online and the QBO ecosystem, pretty much what we learned at QuickBooks Connect, because we have QuickBooks Connect coming up very soon. Most likely, we'll talk mostly around the new QuickBooks Online Advanced SKU, which is quote unquote Intuit's version of QuickBooks Online Enterprise, right? It's the one SKU that's going to be gearing towards sort of the larger, more complex businesses. So I have a feeling that we're going to talk mostly about that on the 15th, because they're going to make a lot of announcements next week at QB Connect. And then right after November 15th, we're going to be in a regular every other week schedule. We have already scheduled all the episodes. That was the biggest feedback we received from our attendees, that they wanted to know ahead of time what all the episodes were about. Other things I would recommend looking into on November 7th, this is Wednesday, November 7th, I'll be running a webinar called Tax Power Hour, Section 199A, the 20% taxable income deduction. I'll send you an email on how to sign up for that. And that's going to be great, because this is probably the one area of the tax code for the new 2018 tax reform that most accountants are worried about giving advice to their clients. So I'm bringing a guest speaker that's kind of an expert in it to discuss that in detail. Also on Friday, November 2nd, I'll be running my 3-hour webinar / workshop on value pricing, where we're going to do a real deep dive on how to put together packages and options, which will be a sort of a continuation of the free Power Hour webinar, but that will be a paid webinar. If you want to learn about that, go to valuepricing.net. Also like to invite you to be part of our live podcast, Art of Advisory, in Facebook. Just go to facebook.com/Art of Advisory, and we have a podcast with my colleague Kirk Bowman all about transitioning to advisory services. And finally, I hope to see you at QB Connect in about 2 weeks. And if you are a fan of the show, of QB Power Hour or any of our sponsors, make sure you let them know, let me know. Come by and hang out. Once again, thank you, Avalara, for sponsoring the webinar series and sponsoring the episode. Thank you, Matthew, for all that great information. Check out Avalara at avalara.com, and we'll see you next week. Join the Facebook group or email qbpowerhour@gmail.com if you have any special requests, topics, or suggestions. Thank you very much, and have a wonderful day.